What's up, guys? Joe here with DaVinci Trades. Welcome back to the channel. I've been asked the same question like 5 or 6 times today, and I just wanted to address these questions publicly through a macroeconomic perspective, because ultimately right now it's not about charts and technicals. Now, don't get me wrong, I love my charts, I love my technical indicators, but I think you all can agree with me that it's extremely important that we use all the other weapons in our arsenals. Anyway, subscribe to the channel if you're liking these videos and hit that like button at the end after we go through everything. So one of the questions I had today was, how low do you see ETH and Bitcoin going down? And assuming I had given him, just a straight up answer, he asked, one would suggest to buy at that point and, wait for another 3 to 5 years to see growth again. Apology about the silly questions, but you seem to understand these trends perfectly, yada, yada, yada. Thank you so much. So here's the deal. In order to estimate how far Bitcoin, Ethereum, and the rest of the market will go down, it's important for us to have, a general understanding of, macroeconomics. Now, depending on when you're watching this video, the Fed might have already had his meeting and increased interest rates by 50 to 75 basis points. So as if it's not hard enough for people already. Consumers, entrepreneurs, business owners that would like to borrow money for cars, businesses, homes, whatever, simply won't. Now, if you couple that with decreased spending from consumers, then businesses will probably stop producing as many goods and services, which will further aid in a decline of GDP growth. And if you don't already know, a declining GDP growth is just an indicator of a declining economy. So in the US, 2 consecutive negative GDP reports will signify a technical recession. With that said, the second GDP report will come out on the 29th of this month. If this GDP report shows negative, then we will be in a technical recession. But keep in mind that the markets tend to price in economic conditions 3 to 6 months ahead of time. So I've had a bunch of calls with other friends and people in this space who have agreed with me that this downtrend that we've been seeing for the last 2 to 3 weeks, maybe even longer than that, I don't know anymore, has been the market pricing in a recession. So if the GDP report comes out later this month and it's just terrible, so we need to pay attention to unemployment rates, inflation, GDP as close as possible so we can try to predict what the markets will look like in a 3 to 6 month time frame. This process sucks. It's not easy, and everybody who studies economics is probably going to have a different projection for you. Now, I'll tell you what I'm not going to do, because this is a mistake that I've made before and I know a lot of other people make. I'm not going to wait for the media and the news outlets and all these articles to be like, hey, the market's turning around, and hey, everything's getting better, and hey, you should do this and do that. At that point, when everything is starting to get better, the market has probably already priced in the market getting better. So Ethereum, Bitcoin, the stock market, and a bunch of other things are probably going to have retraced, 30% of what they had already dropped from. So not like a 30% retrace. I'm just saying, 30% of what they had fallen from. And at that point, you kind of shoot yourself in the foot because you didn't use the macroeconomic indicators to kind of find the bottom, because it's a lot easier using macroeconomics and, again, technicals when you can, to kind of find the bottom, historical markers as well, than waiting for the media to say, hey, everything's getting better, because you guys know at that point when everything's getting better, shit's going to turn around. So that's not what I'm going to do. I'm going to use the macroeconomic indicators and stuff like that. I'm going to stay away from, and I'm saying this because some people, I don't do this anymore, but I'm saying some people do, and they'll wait for things to get better by news outlets, and next week they're like, man, I bought at the top and now it's on the bottom. So either way, that's what we're not going to do. Do what you want, but now, as far as technicals go, I've been looking at index prices when COVID dropped, and we're right around those areas. So I have strong conviction, just based on the economy, the fundamentals, the macroeconomics, that we're going to touch those areas again and have a potential bounce. The question is when, as timing is key with this situation as with most. So to answer his question, and I told him this is just a prediction, but after interest rate hikes, the main thing that we're going to be focusing on that could affect the pricing of the stock market and everything else is that GDP report. Now, I think that after interest rate hikes and up until June 29th, Bitcoin and the rest of the market could see a very, very small rally. It's not going to be anything extravagant. But then, if GDP is negative and we go into a technical recession, Bitcoin and everything else might fall another 10 to 15%. I would assume that Bitcoin could drop to around 19 or below to test that support. And again, Ether and the rest of the market would likely follow the same pattern. Let me know what you think. Subscribe to the channel, hit that notification bell. See ya.